I'm 47 years old. I've been in the mortgage business for 25 years now. And throughout those years, I've learned one powerful lesson. I've witnessed it firsthand many, many times. And that's that real wealth building comes with time in the market. The earlier in life someone begins to invest, the greater their net worth in years to come. And housing is no different. But there's one major obstacle that most home buyers have, and that's saving enough money for a down payment. Now, setting a monthly budget is really easy once you have a stable job and predictable earnings. But saving up enough cash to cover a down payment and closing costs to buy a home, that can take years to accomplish. And in a way, it just feels like the system isn't fair, right? The rich keep getting richer and everyone else just keeps struggling to make it. But fortunately, there are programs out there that many people just don't even know exist. Programs that can help you buy a home 3 to 5 years sooner than you ever thought possible by reducing the cash burden that comes with buying a home, right? And I'm talking about owner-occupied down payment assistance grants. In this video, I'll discuss the Federal Home Loan Bank $15,000 grant program. But before I do, if you're thinking of buying a home in the next year, be sure to like this video and subscribe to this channel so I can keep you updated on every homebuyer program. The Federal Home Loan Bank of Atlanta, they award millions of dollars every year to help homebuyers. In fact, $60 million in 2025 alone through various grant programs to help make homeownership more achievable by reducing that cash burden. Now this year, the grants range from $15,000 to $20,000 per household, and it's to be used towards down payment or closing costs. Now, for the most part, every down payment assistance program that you'll find, it's gonna have two requirements. Either your income falls within a certain range, or the property that you're buying needs to be in some type of targeted area. For the FHLB grant, the income is the primary driver behind how much money is available. It doesn't matter where the property is located. The $15,000 grant is called the Workforce Housing Plus program. Now, of all the grants I've seen over the years, this is one of my favorites. And the reason I like it so much is it really only comes with one restriction, and that's your income. You do not need to be a first-time home buyer. You don't need to remain in the house for some specific period of time. And the best part is you never have to pay it back. Like literally, if you qualify, you get $15,000 to buy your home and absolutely no strings attached. So now let's talk about the one and only restriction, and that is your household income. Now, to be awarded this grant, your income must fall between 80% and 120% of area median income for your household size, right? So the larger your family, the more income you can make. And I'll link the FHLB income website in the description below. Now, for my market, just to give you an idea, a single person can have an income ranging from $86,650 up to almost $130,000. Now, that's the DC market area. A family of four could actually see that income increase from $124 all the way up to $185. Now, that's a substantial amount of income to still receive this grant. Now, if you move over to the Baltimore MSA, it's just sort of, an hour outside of DC. The income limits drop by about $20,000 to $40,000, but again, you can check that out in the link below. Now, here's an important pro tip. When FHLB analyzes your income, they will project out your earnings. So they want to make sure that all of your household income is counted. This includes any side hustles you might have, commissions, bonuses, overtime, and basically anything that comes in that's a form of income. It's actually the opposite of what traditional mortgage lending uses, which a lot of lenders, if they see variable pay, they might try to exclude it because of the uncertainty that it will continue. In the case of FHLB, they assume it will continue. Now, most loan officers miss this entirely. So it's very important that you bring this up and that you're completely clear about these income limits, because the last thing you want is to get all the way to the end of your purchase. You're already under contract and you find out that you don't qualify for the grant. So big pro tip, definitely look out for that. So what if your income is lower than 80%? FHLB offers a homeownership set-aside program. But this is one of those weird instances where I scratch my head a little because it actually shocks me at the restrictions that exist for this lower income tier. Now, the grant does increase to $17,500, which at first sounds great, right? An extra $2,500. But then there is a catch to this. That $17,500 has a 5-year retention, which means if you sell that home within 5 years, you probably won't, but if you did, you need to pay a prorated portion of that money back. Now, they also have another important requirement, which is you must be a first-time homebuyer, meaning you cannot have owned any residential real estate in the past 3 years. So let me sum this up for you. If your income's between 80 and 120% of median income, you get $15,000 with absolutely no strings attached, and you do not need to be a first-time homebuyer. But if your income is less than 80%, they will give you $2,500 more, right? $17,500, but it has a 5-year retention, and you must be a first-time homebuyer. Now, usually we see fewer restrictions with lower income, but not for this program. FHLB also extends another $2,500, so this is a total of $20,000 for their Community Partner Program. That's basically any current or retired, so important or retired, law enforcement officer, educator, healthcare worker, firefighter, first responder. It can be either for our veterans, any active duty members of our military, and their surviving spouses. Now, for this grant, you do not need to be a first-time homebuyer, but your income must be less than 80% of median income. Another great thing is all of these grants I just mentioned, they can be used in conjunction with all the other local programs that exist. For instance, earlier I mentioned a program that's based on a property's location. Like maybe there's this CRA or Community Reinvestment Act. Maybe there's a program that a select bank offers that subsidizes rates. Maybe it removes the PMI, private mortgage insurance, or they give you a closing cost credit, or all of those things. You can use the FHLB grant to further enhance those other loan products. So there you have it. It's everything you need to know about the FHLB grant. If you're considering buying a home in the Maryland, DC, Virginia region, please reach out to my team. All my contact information is below in the description. And be sure to check out our next video as I continue my mission of educating homeowners. Until next time, I'm John Downs.